SanDisk dropped 7.8%, and everyone is panicking. A 75-point lab score already signals that AI flash demand eclipses the sell-off. Enterprise flash capacity is expanding at a blistering pace that outstrips industry growth, feeding next-gen models. But the lab score is 75 out of 100, strong buy. Here's why the sell-off is wrong. 3 NAND memory. Stocks plunged 6.7%, led by SanDisk's 8.6% pre-market drop. This sector-wide sell-off disrupts a massive rally, even after SanDisk posted a massive 57.9% earnings per share, beat of $23.41. The market is aggressively pricing in a cyclical peak, shifting from revenue growth language to margin preservation concerns. Investors are hyper-focused on manufacturing yield as the ultimate indicator of future profitability. The physical bottleneck is 3D NAND stacking limits, where physical scaling requires etching billions of microscopic channels through 200-plus layers of silicon. While competitors like Samsung and SK Hynix aggressively ramp up high-density packaging, SanDisk's yield for its newest node remains severely constrained. This hardware reality limits their capacity growth, justifying management's conservative guidance despite the historical earnings beat. SanDisk's scale moat is threatened as Samsung's vertical integration allows them to produce similar high-capacity enterprise solid-state drives at a lower cost per gigabyte. Ultimately, the physical manufacturing limits confirm that the market's aggressive growth expectations are hitting a hard silicon ceiling. Quarterly financials showing modest revenue momentum for SanDisk. By Q3 2026, escalating trade policy friction will compress SanDisk's operating margins by at least 250 basis points. While capital rotated aggressively out of the sector, dragging SanDisk down 8.6% compared to Micron's 6.2% and Western Digital's 5.2% drop. The broader monetary environment remains highly restrictive. With the Fed rate at 3.63% and unemployment rising to 4.3%, consumer demand is softening. Although recession risk sits at a low 8.7%, the normalizing yield curve is forcing SanDisk to tighten its capital expenditure budget. This directly contradicts management's post-earnings narrative of unconstrained capital deployment, as high borrowing costs limit aggressive capacity expansions. On the geopolitical front, high U.S. tariffs on Chinese electronics imports and strict export controls on advanced memory chips directly squeeze SanDisk's global supply chain. Because SanDisk relies heavily on Asian factories to package its silicon, these trade barriers force expensive logistics shifts that eat into profit margins. This political friction acts as a massive headwind, even as contract prices for NAND surged more than 100% in the first half of 2026. Socially, the consumer backlash against high-priced tech is slowing PC sales, threatening to leave SanDisk with unsold inventory if AI-enabled smartphone adoption fails to offset the decline. With short interest at 11.5% of float, the market is actively hedging against this geopolitical vulnerability. While analysts maintain a bullish consensus, this friction wave will ultimately overwhelm the stock's valuation. SanDisk reported earnings per share of $23.41, beating the Wall Street estimate of $14.83 by 57.9%, a solid beat that signals strong execution. SanDisk, NAND Flash, is trending higher at $2,097. Management's headline: we delivered another quarter of record revenue and profitability, driven by strong demand across our end markets. That's the phrase, repeated in the earnings call, the press release, and every analyst slide. It's designed to make you feel momentum is unstoppable. It's also designed to make you not ask why insiders net sold 5,625 shares in the last 90 days. That's not a typo. Executives are taking chips off the table while the PR machine cranks out record language. Historically, when insiders sell at this clip during an earnings beat, it precedes a guidance haircut or a margin squeeze. The lab doesn't do vibes. We do patterns. This one's flashing yellow. The EPS beat, 57.9% above estimates, is real, but the streak is the story. 4 straight quarters of surprises, averaging a 189.8% beat. Wall Street hears growth. The lab hears accounting flexibility. R&D spend is up 6.7% YOY, but as a percentage of revenue, it's flat. That's not conviction, that's maintenance. Meanwhile, Bernstein just raised their price target to $3,000, but ARK trimmed their position. Analysts are cheering, but the smart money is hedging. The divergence is the tell. Management called demand unprecedented. They called it broad-based. That's not a synonym, it's a downgrade. Unprecedented implies scarcity. Broad-based implies saturation. The Q&A transcript confirms it. When pressed on inventory levels, the CFO pivoted to long-term visibility. The momentum breakdown for SanDisk. RSI sits at 64, pointing to bullish momentum, with buyers in control. MACD is currently bullish, with the histogram crossing above zero. SanDisk's bull case rests on massive demand for high-speed enterprise flash storage to fuel artificial intelligence models. This cycle is supercharged by next-generation smartphones with built-in AI, driving high-capacity storage adoption. At a forward price-to-earnings ratio of 12.2x, the growth trajectory remains highly attractive. But here's what breaks the bull thesis. High U.S. tariffs on Chinese imports squeeze SanDisk's Asian packaging facilities, threatening margins. Furthermore, smart money is taking chips off the table. FMR LLC trimmed its position by 38%. A sudden drop in consumer PC spending will leave SanDisk with massive unsold inventory. The question that makes the room go quiet is, can SanDisk outrun Samsung's vertical integration without sacrificing operating margins? The answer is no. SanDisk lacks the capital scale to match Samsung's fabrication facilities. As competitive capacity ramps in 3Q26, SanDisk must cut prices to maintain market share, eroding the high-margin profile Wall Street models. Relying on external packaging partners leaves them structurally exposed to bottlenecks competitors avoid. We issued a strong buy at $1,963.60, and the stock has since gained 6.8% to reach $2,097, validating our near-term thesis. If SanDisk breaks resistance at $2,335 by Q3 2026, it confirms a post-earnings breakout toward $3,000. If it falls below support at $1,559.32, the cyclical downturn is here. Our AI score of 75 out of 100 reflects high conviction that the upward trend holds, but we must watch the $1,559.32 level to confirm the cycle has not turned. Here's the macro picture shaping SanDisk. High U.S. tariffs on Chinese electronics imports and strict export controls on advanced memory chips directly squeeze SanDisk's global supply chain and raise manufacturing costs. This matters because SanDisk relies on Asian factories to package its silicon, meaning political tension forces expensive logistics changes that eat into profit margins. The massive shift toward artificial intelligence requires giant warehouses of high-speed flash storage, which acts like a super-fast digital filing cabinet for data-hungry algorithms. SanDisk must constantly outrun rivals like Samsung and Micron in shrinking these memory cells, or risk losing lucrative contracts to faster competitors. The launch of next-generation smartphones with built-in artificial intelligence features represents the biggest sales boost for SanDisk's high-capacity storage chips over the next 2 quarters. Conversely, the main threat is a sudden drop in consumer spending on personal computers, which would leave the company with unsold inventory. SNDK's 180mm Superscript 2 die shrink just crushed Wall Street's margin model. Bulls or bears winning SNDK? Comment your prediction. Look, this isn't financial advice. We're engineers, not brokers. Markets move fast. Past performance never guarantees future returns, and you should always run your own numbers before pulling the trigger. That said, the data doesn't lie. This is a structural shift, not a flash in the pan. Subscribe so you don't miss Thursday's deep dive. We're tearing down AMD. If you want our full breakdown on Rocket Lab, the link is in the description. The lab's verdict stands.